All right, everybody. This is Jeff Scott, and it is about 6 p.m. on October 21st, 2012. And welcome to this week's HGSI review. I look forward to seeing many of you at the live meeting later this week. And we'll have a chance to go through these things with Ian and Ron, as well as get introduced to some new goodies that I know they prepared for us. Disclaimer, this is for educational purposes only. I'm a doctor, not a broker, and I'm not affiliated with any software vendor or trading company. The tools I demonstrate are those that I use in my daily trading, and I have paid for all the tools I'll be demonstrating, which should suggest that I may have different or less biases than others. Hopefully we'll get this done in 45 minutes, as I have a lovely dinner waiting for me. I'll start with the market update, then go through my top-down investing approach, look at a couple of shortcuts, and hopefully leave you with some stocks and actionable things for tomorrow. I've mentioned several times Ian Woodward and Ron Brown, Ian on the left, Ron Brown on the right. And for those that are not already registered, at the end of this week in Palos Verdes, California, there'll be our next or latest live meeting. There are lots of rumors floating that this is it. So meaning this may be the last time that Ian is going to present live. At least in this format. So if you haven't already registered, the best way to change his mind is for us to have a great attendance. For those that don't know the program, again, I am independent. I'm a trader, not a software owner at this point in my life. www.highgrowthstock.com is the site if you're interested in the HGSI tool. The free reports which Ron Brown puts out can be found under reports. And there's a free trial software, which I believe now is down to 30 days. No out-of-pocket and no credit card necessary. I show this every time, in the next slide every time, because frankly, this is to me all that matters. Where are we today? You know, if you'd asked me on Thursday, we're on a leg up, and Friday we got hammered. So I guess we'll talk about whether this is the beginning of the end, or Friday was a one-day hiccup. As Dave Steckler pointed out, missing earnings on option expiration day is not a good thing for a market. So right now, it looks like we're in the sell mode. And you know, no one says you need to own or buy new stocks when you feel the market is going down. So even though I will identify potential long candidates, if the market is truly rolling over, and certainly the risk of that is high, individual stocks are likely not to perform well. The don't fight the trend old adage is true. If the market is in an uptrend, it probably doesn't matter where you buy, although we like to buy it on pullbacks. If the market is in a downtrend, I don't buy, I short, or I buy contra ETFs. I want to buy them at times of retracements. And if the market is sort of sitting at the top of the pattern or down at the bottom where it appears to be basing, I don't know if it's going to break to the high or to the low, but I know that I'm going to want to buy at support, sell at resistance, and look to do the opposite if there's a convincing break above or below. The website has a number of other teaching tools on it, and as we go into the charts, be your own guru, invest as a business, make sure you have the right employees, tools, and software. Continue your education, and like I said, I will be at the HGSI meeting this weekend, and trade the market we have, not the one you think you should have, and I think we started to get what we thought we would have, at least on Friday. So on that note, for those who haven't been here before, I will be spending most of my time on the market, because the market to me is going to determine what my stocks and other things will do. So I always like to start in HGSI, and it's updated through today. And pretty much most of the stuff I use is stock. There's occasional things that I do that might not be stock, and I've always been happy to share them on the board, which is sort of part of the HGSI community that everybody participates in. So I always like to start in Ian and Ron's 3 big groups, Major Markets Plus. I like the top-down index because this has given me a 1, 5, and really 13-day technical performance, heavily weighted to the last day, but looking out beyond the tip of my nose and really giving me a picture over several days of the market to get my understanding of what I think is going on and whether or not I want to be going long or short. So if you rank on raw combo and look at where the strength is, you can almost immediately see why, if you are an HGSI investor or frankly any type of a long investor, you had pain on Friday. The dollar, it looks like it's inched up. It was flat for the week, up 0.4% on Friday. And as we talked about last week, if the dollar runs up, then this market will turn over. And we've seen this now in the marketplace for quite some time, that the stock market seems to be independent of the dollar, or excuse me, inverse to the dollar. And as the dollar goes up, not only would you expect to see stocks pull back, but also commodities, which include gold, silver, and black gold, oil. So the dollar, as the dollar goes up, they pull down, they have put in a low on Wednesday, a nice day on Thursday, and Friday another up. Now, the bad news for the dollar is it's hitting resistance at the 17-day moving average, but you might see this go up all the way to 22. There are ways to play the dollar. I play it buying EUO. There's UPP or UUP, which is this thing here, and others that you could purchase to play the dollar. Second on the list, why you could tell the market was going to have a tough week, was the huge move that we see on the volatility this week. And it looks like it will go up to the 200-day moving average. And as you could see, this 200-day moving average, although it did break through for a couple of days here, has pretty much kept a cap on the VIX. If the VIX breaks through and continues to run up, more evidence of the market in trouble. Why would I think it might be different this time? We've now gone green on the bondos. You won't see a force because there's no volume on the VIX. You had a very big white candle day. It looks like a bullish engulfing pattern, engulfing the body from, probably not a true bullish engulfing, but did engulf the body from Thursday. A big kahuna showing the big move. Let's see, Bollinger Band chart. I don't want to go too far away from my usual routine. We'll put Bollinger Bands on the VIX. You could see that we are getting, we are at the top Bollinger Band. So more reasons, if you look back, certainly back here in July, here in September, here in early October, and again, we're at a point at the top of the Bollinger Band where we typically see this index pull back. If the volatility index pulls back, one would expect strength in the market. So sort of consistent with the dollar, if the VIX goes up, if the dollar goes up, one would expect to see the market not well behaved. Let's go out of this view. Where was the weakness? Small stocks, NASDAQ, small cap 600, NASDAQ 100. Gold and oil, other commodities did not have a great day on Friday. In fact, if you look at performance, you can see the volatility had such a great day. Treasury bond iShares is another way of playing strength in the dollar, I suspect. And you could see that a rough day for a lot of things. Most of the indices are down at the bottom on Friday. And if you look at 5-day performance, volatility was the lead. And on the bottom, gasoline, silver, oil, gold, so things that might be in commodities themselves that might be dollar sensitive. So perhaps we saw more than one day of weakness, especially in that category. If we take a look, everybody knows, let's look at the NASDAQ, C500, the Dow, finish on the S&P 1500. Let's look at evidence or understanding what the market did. Pretty much the weakest index has been the NASDAQ, and one can see that the NASDAQ is broken down and is, a lot of talk about support around 3,000 right there. and we're sort of bounced off of it a little bit on Friday, I think there's just as much chance that we break right through, and I worry as much about this point here, which would be the 200-day moving average. You had negative pocket pivots, everything's gone red above. Certainly the NASDAQ is weak, and as I said, I think it's the weakest of the indices. If we look at the small cap 600, looks a lot like the NASDAQ with the pocket pivot down. Everything has turned red, big kahuna, quite ugly. Take a look at the S&P 500. You'll see that a number of these indices, and the S&P 500 is one of them, you are seeing, let me get rid of those. And pull back to the 50-day moving average, and if you look further, let's see, I kill some more of these trim lines I've written on the time. Whoops, sorry about that. One looks further, one could see that really, I think, it almost looks to me like we're going sideways now. I'm not great at drawing these. I'm not nearly as good as Ron. But are we going sideways up here, and are we in a new trading range? Or are we going to break down and visit the 200-day moving average? So pretty pivotal day for the S&P 500 coming tomorrow. We'll see if it can bounce as well as the NASDAQ. The Dow obviously represents a grand total of about 30 stocks. So, a lot of people, everybody follows the Dow. Dow looks exactly like the S&P 500, and it's held at the 50-day moving average. And will it come down and visit 12,972 in that neighborhood where the 200-day moving average is? And if it does that, that would be a 450-point drop from here, so another 4%. So I think that will be very telling to see. And I also like to look at the S&P 500 because to me that's the best indication of the market as a whole, because as I've talked about on these calls before, this includes the 100, the 500, the 400, the 500, and the 600. So small on the 600, mid on the 400, large on the 500, the S&P stocks. And the same story where it looks like we've had a market that has run up and now almost looks like it's now going in a different pattern, and we will see whether or not we break below this and go down and visit the 200-day, which will be painful if you're long, or if we bounce and go forward higher. So lots to be concerned about this market as we go towards tomorrow. We'll take a look at a couple of other things. Edge Trader, as people know, I like to look at where the buckets line up, and one can see that over half the stocks are trading below the 50% line, the S&P 1500. But remember, it's only pulled back to the 50-day moving average. Now, of interest, over 14% are trading below the lower band. Now, I've seen this get to 25, 30, or 40% before the market rebounds, but it's starting to tell me we're getting to a point where a couple more days of this, and you might see this get to a very oversold perspective, and we might see a shift to the right. If you think about a Bollinger Band, 90% of the activity is captured between the upper and the lower band, and if you break above or below, you're only there 5% of the time. So the fact that we've got a lot of stocks that are below that lower band supports the fact that at some point we might see a bounce back, but we're probably not there yet. I like to look at divergences to understand where we are in the market and to see whether or not we have more positive or negative divergences. So I'm going to start by looking at the positive divergences, and we really only have two. This thing's been trashed, so I'm not going to pay any attention to Maxigen. And then I've got Rondell's Inc. And what this is looking for is the fact that we've got a lower low, but not necessarily a lower low on the MACD. So you clearly have a trending down there, while here on the MACD you have, if I look here or I look on the line, even though the stock market keeps getting lower, the MACD is getting less and less low. So that would be a divergence, and right now I'm looking at more qualitatively to get an idea of whether I have more negative or positive. Now, I can assure you I have more positive divergences, and I'm going to let this run on the Russell 3000 for a few more minutes, and I'm going to come back here and take a look at one of my other favorite things to look at, which is the commitment of traders report. So I've created some controversy here, and I've had a lot of feedback about my interpretation. So let me just say a couple of things. I appreciate the feedback because I'm learning too, and especially the folks that turned me on to Gary Kamen and some of the other COT gurus. One thing I'd like to add is that there is different interpretations, and I've been usually using the interpretation of John Bollinger, and in John Bollinger's interpretation, he looks at the individual investor in yellow and the individual speculator in yellow and the professional speculator in blue. And some of the other guys that I've now started to read, they actually do a combined with the commercials. And one of the things that they pointed out is that the commercial, although it's come up a little bit off the bottom, was at a recent low, predicting more bearishness. Now, I'm still in the process of understanding this different interpretation. So again, I thank those that pointed out to me that there are different ways of looking at it. And one of the challenges that I thought with Bollinger's technique, frankly, was that the professional speculators started going long before the market hit a bottom. So if there's a different way of doing this so that I can more appropriately predict tops and bottoms, I'm all ears. And so I'm learning about this. But as you can see, the professional speculators still are buying at this top, the commercials suggesting that we're at a top. And that's sort of the point of the thing called the bullish review, which takes a close look at the commitment of traders report. Now, you don't need to have me read this for you, but you can see that all the indices turned down, several with bearish reversals on Friday. So these are the futures, and there's a lot of red looking at least pivots on Friday. So a lot to be concerned about perhaps in the market. I like to look at the divergences, and I look at them with a number of different programs. And within TradeStation, a couple of things came out to me. The euro dollar with a bearish divergence on the MACD. A number, oil, emerging markets, healthcare, gasoline, energy, materials, all with bearish divergences, consistent with the pain we're having. If you're looking at a place to play the market, emerging markets, bear short, energy shorts, financial short, gas shorts all had bullish divergences. Even in the IBD 50, I saw negative divergences on LA Nevada Gold, Coors, and Valiant. If you look at some of the large volume stocks that you might trade, bearish divergences everywhere. If you look at the bullish divergence side, as I mentioned on the bearish ETFs, and frankly, let's see if there's any, I'm looking at a large number of instruments. Well, your bullish divergences are in the EUO and in the VXX. You're probably not in a happy point of time because those are both contrary to the other long instruments. So again, consistent with the expectation of more pain in the market. Back, let's see about stock finders, just a way of me doing this on a large amount very quickly. We had two positives, and you can see the number of negative divergences far outlined. So I actually will run this tonight later on different industry sectors as well. So I'm going to shut down Stock Finder, which somehow I've been told Warren is no longer going to be selling, which is too bad. So next thing that I want to do is jump and take a look at last week's performance. So if you've been on before, you know I do my GPA. stands for Group Performance Analysis. I look at a large number of groups that I put together early in the week, and then I look to see how they traded, and I look over time at patterns that might give me some clues as to things that I may or may not want to be doing. I'm looking at these groups as if they were bought at the open on the 15th, closed at the close on the 19th, and looked at $5,000 in each instrument that was in their groups. So the first thing is I look through and I see painful week, but you know there was a lot of black as well. I look for certain things, and I haven't done this yet today, so it's the first time. I look for the S&P 500. So S&P 500, all that volatility up and down. The market ended up relatively flat, but up 0.31. The stocks that I picked for my buy watch was up a little bit more than the S&P, and my holdings were up twice the S&P, but really modest, and you could see barely broke 50-50. I like to look at things to give me an idea of how others have done. The MarketSmith 250 Growth Index was up less than the S&P 500, which is not a good sign for growth stock investors. And in fact, if one looks at the HGS 100, it was down about 1%, and the IBD 50 was down 2.76%. Oops, wrong one, 2.42%. So for high growth stock investors, it was a tough week. Overall, the market was flat and lots of volatility. What seemed to be working this week, and this is why I like to look at these lists, consolidated buys is a list that comes out of AmaTrader, and then that met my buy criteria. You know, pretty good return. All of them were positive. Bottom fishing for nuggets. Interestingly, some of my bear searches were actually positive for the week. Breakouts. So I guess what I would say looking at this is that HGSI stocks underperformed what was a relatively flat market for the week despite a lot of volatility. Unfortunately, probably predicting what we're about to see. And lastly, I'd like to take a look at some of the elder indicators on the market as well. And let's see if I can get this to work right. Let's just take a look at the S&P 500. That's the 100, Jeffrey. Let's go to 100. There it is. All right, that'll work. You know, got a lot of things open, so I'm afraid it's going to probably take me a couple seconds. Let's see. Yep. This will also help if I do this as well. There we go.
Bearish reversal bar entry now.
Well, there you go. It's bearish, but no, you can look at with Elder. You had a long red bar on the daily, the blue on the weekly, and on the monthly, saying that it's not a time to go long, and target could be down here as far as 1411, down to the lower limit on the envelope. But I feel bearish about the market, which means as I look at industries and sectors, my enthusiasm for going long is going to be muted. Now, Ron did an excellent review this morning, and he talked about home builders as being really the only place that the market was moving up. And yes, he was correct. Home builders were the stars. So let's take a look as I go through my top-down approach. So I've already picked and said that I'm not real bullish on the market. I identified strength in the dollar and volatility coming in. And I talked a lot about will we see a bounce this week or not. Now, I don't believe futures are open yet, but we'll just take a quick look. And it actually comes off their lows some. Really not a whole lot going on in the futures that I've seen over the last couple of hours. All right. So next thing I'm going to look at is I'm going to look down at the industry groups. And you could see in the top-down view, there are 142 industry groups. Ron Brown did an excellent review today looking at tiling, the warehouse, and the ranking modules, and I refer you to his excellent review. Just as an aside, since I'm going to be at the meeting this week, I'm going to guess that I'm not going to do this next week. If I do it, I will post a note. And load it to my YouTube site and send it to George. If I don't do it, you won't see a note. So if you look at 142 groups, looking at a more broader basis of performance over a couple of weeks, home furnishing, building products, power producers, cable satellite, home building near the top. But you all know that I like to take this 142 and go down to the two-day force and look at where the strength is in this market. And the reason why I'm very muted to be long is pretty clear, because there's not a whole lot of activity going on in the longs. These are the groups that are positive, and from that 140 plus groups, you now see 91 were negative and 3 were positive. So if you are a person that likes to short, more evidence of weakness in the market and more reason to be looking. Now, I'm not a fan, I won't say that. I don't usually short individual stocks. As I've said before, I unload my margin, I raise cash, I buy contras, and occasionally I'll buy puts. On long positions, I've been known to write calls, but frankly, when the market's falling, it makes me feel better, even within the money calls, to save get some premium. But the premium seems to dry up with the market tanking. So the strength of the market, clearly the home building. For the last week, I thought how it looked like it may be getting ready to go without some of the stocks that support the home building. And frankly, if you look at 1, 2, 3, 4, 5, you can see on Monday, on Friday, sort of a doji, almost a hammer-looking doji without much of a bottom wick. But 1, 2, 5 days moving up, 2 kahunas, forced kahunas as well, fair volume, pocket pivots, everything green. What else can you say except buy, 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 buy until they stop working? One of the reasons why I don't think they're going to stop working and why I took a fairly substantial position in Toll Brothers, and I'll look at that one in a second, is even though some of these have very big multiples, 55 here, the market cap here, 7 billion, give or take, the growth rates are fairly phenomenal. And there's not a lot of places, as I went through my review this week, and I look at bottoms up and tops down, that I saw huge amounts of earnings per share growth. Maybe a lot like Pulte, almost exact, and it had pulled down to the 17-day last week on Friday. Perfect place to jump from, one kahuna during the week. Now, I don't like this one as much because it's got, it's coming off of big losses to smaller losses. I prefer the ones with real earnings. I mentioned here's another superstar-looking chart. Pocket pivots, everything green, volume coming in Friday, awesome earnings per share growth, trading at a multiple of about 48, plays a teeny-weeny dividend. The total pulled back, as you could see, 1, 2, 3, 4, 5. Got above the 50 on Monday, has moved up since, but it's still pretty close to that 50-day moving average. Fantastic earnings per share coming into the stock. Trades at a high multiple of 81. My only concern is that the Bongo Weekly has been negative, and I'd rather go long on a stock that's positive on the weekly. But with the rest of the sector looking as good as it did, I decided to put on missing. The others have always been green. So that's home building. Just looking at the list here, there's a Tiddler called Standard Pacific that looked pretty good. Let me go back to this view. As I said before, I like to only buy things that are above the index. If you like cheap stocks, this one has looked good as well. It's sort of the lower cost group, and it would have been nice to buy it when it pulled down on its 50 negative weekly bongo. So as far as this group goes, many of these look strong. Many of them have great earnings. If you look here at the fundamentals, you could see how great their relative strength is, their group is, their earnings rate, their ERG rather, mostly green in the earnings per share rate. Certainly the group to be in right now. Cable satellite index, don't know this group very well. Whoops. First row, got it. And as you could see, earnings per share don't look as good. The one that intrigued me in this was me. And as you could see, lower left to upper right. One thing that would bother me here, and why I probably would hold off on it, is it's kind of near the upper level of its high jump bar, and you could see after it touched it, it pulled back a little bit. Pocket pivots 4 days last week. Everything is green. Outstanding earnings per share growth. Teeny weeny dividend, multiple PE of 54. That's a beautiful chart, tight as can be. And whether I buy it now or I wait to see if I can get it to pull in if the market corrects, I find this to be quite attractive. Real quickly go through the other list to see if there's anything. Dish Network, I don't like the earnings per share growth, but obviously something is going on in this group. In a nice run, as you could see, nothing shabby here, except it's now getting a little bit extended. Let's see if it pulls back. AMC Networks, again, a lot looser. Not sure I can tell what's going on there, and hence why Virgin Media was my favorite. I'll look real quickly at Liberty Global because there's a lot of stocks here that are interesting, and we all have our own taste of what we like to buy. Here's one hugging that 17-day movie average, everything green. Stubbed the toes here, but great earnings coming out, 2 quarters out, no dividend. So a lot of good-looking charts in the sector of cable and satellite. And, you know, REITs, I think, do well until interest rates go up, and telling us that's going to take forever. Whenever I listen to CNBC, it sounds like we've got a lot of softness, not softness. We don't have enough supply of rentals, and a lot of these REITs do rentals. What might mitigate that is a lot of the early foreclosure folks are now in year 3 post-foreclosure, and apparently you can get a new house loan in 3 years. Here's one that had a pocket pivot on Friday at Kahuna's, Big Kahuna on Thursday. Everything is green. Fantastic earnings growth coming into the chart. It's been one that had been pulling back. I guess depends on not, as I've said multiple times, high before the preceding low would be this one. It is at a trend line that breaks through here. This thing may go up a couple more bucks. And one thing that's nice about this is they pay dividends. Here's a 3.0 yield. I don't know this industry. I just know a few things that I mentioned before. It had been in a fairly robust pullback. Here's Avalon Bay, great earnings per share per growth, 2.8%. Certainly looks like it's moving up as well. Let's take a look at this on a weekly. These had a pretty good run. They did, and then some softness here. Are they going to start to run again? Remains to be seen. So if you're a long investor, those are the groups that popped up as being interesting. If you're a short investor, right now it's probably better to be short. Some of our friends, semiconductors, which have been weak now for some time, remember they point out Intel a couple of times how weak it was there. We'll just look at a couple of these. Marvell, I thought these were guys in the Apple phones. It certainly really looks weak. I'd rather have shorted it when it broke through the 200 and the 50, but probably too late to short this. Mellanox, don't know what to do with Mellanox. My guess is you're going to start, my guess is it's just that, it's a guess, is that we're probably, I wouldn't be shocked if we don't start to see some strength coming into Mellanox and some analysts coming out defending it. They missed pretty bad. They got taken down from 120 down to 80. It's been a darling. I wouldn't touch it until it based, and it gave me a reason to, but I did put it in my bottom fishing list as something to track. Intel, last time we talked, was it getting close to putting in a bottom? And I think maybe I would say the same thing. It did have its eureka, which, as I mentioned before, is often something that you see as something's being trashed, and prior to a stock starting to hit bottom. So we did have a eureka come in here. We had a number of eurekas the last couple of weeks. Intel and the semis continue to look horribly weak. We'll go back. Biotechnology, changed to index group. So the last couple of weeks, it was like we just converted everything, because these were some of the best a week ago. Here is Gilead. Certainly has turned over, could run down to its 50. I like to short when they break below the 50 and down to the 200, but that's one I might be looking at. Amgen is one that I thought's been overpriced for some time, especially when you look at the lack of, earnings growth slowing down, I should say, and it pays a dinky, 1.7% dividend. The trade's at a multiple 15. We'll see if it can hold that with reducing earnings per share growth rate. It had a big run up early in the week and then had a big pull down on Friday. One of my favorite sells, and some of these may be setting up as buying opportunities, pulled back to the 50. And I'm going to see if I can get it to bounce from here and then look to get back in. A couple others that had lousy weeks. Alexia has been a leader over time. Here's another stock that has had a major run up. Now, that's about 12, 13 bucks. If it runs down to the 200-day moving average, everything has turned red. Growth rate slowing down, but still pretty robust for a pharma stock, but trades at a PE, 3 times the growth rate. Something's got to give, and that's another stock that I might be looking at. At least seeing what the prices of some of these puts are and considering what I might want to be doing. Anything else look interesting on the negative side? Big pharma, software, oil, gas, and exploration. A lot of weakness. Coal, which had a quick run after the first Romney debate with Obama. When Romney didn't clearly win the second, coal pulled back. Certainly that's one stock or one industry that one might expect to be favorably moved if Romney wins the election. So I haven't found anything that's real exciting. So let's do a quick group inclusion filter and see if we can't find anything else. So let's go into user groups. Here's my smart groups. Let's go into HGSI strategies. Let's open up Pocket Pivots, Woodward and Brown, Tools, Group Inclusion Report, and we are going to clear everything, go into here. What do I want? I want to do Pocket Pivots, and then I'm going to find my favorites. I'm going to find Best Criteria, ERG 240, Growth Stocks, HGS 100, Leaders, and then these are all in your program, by the way. Core EPS acceleration, strong EPS rank near 52-week high. I'm going to make a group. The user group, I'm going to call it AAAA, Web, GIF 10.21.12, and let's just find the top 10 stocks. So the assumption here is if a stock makes it into these lists, then it must be a good stock, and if you make it into multiple lists, then you must be a really good stock. So let's take a look. Lennar, Multi-source portfolio, we'll take a look at that one. Thought it might be topping when I looked at charts earlier today. Meritage, a home builder. TCBI, one that we've talked about it several times, has pulled back to support. Patrick, a low-volume stock that supports home builders. Toll Brothers, MDC. More evidence that the strength of this market is in home building. Now we take a look at these real quickly. Let's just go through alphabetical order. Let's take a look at charts and see if there's anything that you might want to consider. Here is ASPS. As you can see, earnings per share slowing down. No dividend, multiple 29. It is a real estate services, mortgage portfolio management, housing recovery, home builders doing well. Perhaps this is a offshoot of that. Doesn't look like a flag, but maybe it's a pennant forming and it's going to run again, pull back to the 17. Certainly something I'm going to watch. You can see that high jump when you had that big day and hit the top. It's pulled back since that point of time. So to watch is reasonable. Not a lot of volume, 170,000 shares. It's run from 35 to 118 over the year. Was extremely tight. Would you like to buy this at the 50-day moving average? I mean, that's the problem here. Is it's pretty extended. AMC Networks, we looked at this before, the cable and satellite, one that had a lot of growth. Had a lot of interesting stuff on the chart. Lots of pocket pivots this week. volunteers, a home furnishing store, the second strongest group. When I looked at over the weekend, and you could see pocket pivots, kahunas, huge volume. I suspect they had earnings come into the stock, which pulled the whole group up. We can go to more info from the web, and we're going to look at FinBiz. October 17th, so just had earnings. Soared. Why? They beat by 35 versus 25 cents. That's what brought the whole group up. More evidence of home construction because people are buying furniture for their new homes. That's a huge beat. Is it too far extended? That's your own call. Certainly, if not, we looked at already. NBC, another home builder, very tight. Great earnings per share. I'm not sure how many used to put up here, but they look good. This one actually pays 2.5% yield. Here's another builder. This strength is so limited in the group. And then a mortgage investment trust. Everything that in this list, here's a bank, a thrift, is all about home building. So here's been a big leader, pull down to the 50. We call that free parking. So I would put that in a pullback, waiting for signal category, where I'm hoping to see a pocket pivot, a big kahuna, something come in that changes this and tells me this thing is going to start to go up. I'm not buying it yet, but at free parking, I'm getting interested. Well, I did buy this one. Pull back, I got my pocket pivots, I'm in it, and that seems to be it. So actually getting done quickly today, which tells you how bad the market was. Let me just show you my buy list and look at a couple of things. So I break things up into leaders extended or gone, pullbacks, ready to run, which means there's been a signal, and I'll look at a couple of those to show you. I want to talk about motivation on that one and probably ERY and FAZ. Pullbacks waiting for a signal are things like that Texas Capital Bank shares where they're pulling back. I'm not ready to buy them, but I'm going to watch them. And then things have just gotten destroyed, Mellanox and Ross Stores. So I do this list every weekend. I usually have one called EPS breakouts and standouts. And as you can see, the reason why it's not here is there were none this week. Not a lot of earnings outside the home builders. Now what I've done is I load this into various programs such as TradeStation, my Thinkorswim that I trade with during the day. But let's just quickly look at rapid fire. Next 10 minutes I'm going to look at a bunch of charts that I looked at over the weekend that intrigued me that I'm going to be watching this week. I will not be going long as a rule unless the market behaves. However, there are a couple of shorts on that list, and I will still look for individual stocks that have strength, such as the home builders. So I'm going to put Jeffries. Let's go to scorecard no index. So I found 28 things of interest. Several of them, like Ross Stores and Mellanox, are totally beat up. A lot of them have pulled back and are waiting to have them stop pulling back. But as you can see, home building, construction are at the top, and I've got a couple shorts right down here. So real quickly, and several we looked at, I'm going to skip. Here's Lennar, home builder, looks great. Already talked about closer to the 50-day moving average. I like that. Great earnings per share. Intellic is a building construction company. Pulled back. Sort of a cup. Two kahunas. Huge volume on Friday. Everything turned green. Pocket pivot on Wednesday. I suspect they had earnings come in. Looks very strong. Weekly. If you look at it from a weekly perspective, it's been in a downtrend for quite some time. Perhaps breaking out and going to start a run. Again, I see what it does, and I'm not putting in a hard in the night before. Pulte we've talked about already. Trinity, other heavy equipment, similar pattern to the last one. Everything's green, had a pocket pivot on Friday, great earnings per share growth, trades at a multiple of 13, pays a small dividend. Many in the sector have been weak the last couple of weeks, Greenbrier being one, but I like this pattern. Looks like it's about to run. Everything's green, and I said great earnings per share. Texas Capital Bank shares sort of sitting in free parking, which we talked about earlier. I'd like to see something kind of kick it off. Didn't look at this one yet. Here's another bank. Fabulous earnings. Don't know this one from Adam. I'd have to do research. Not overly extended. You can see here at the high jump bar went sideways. Pocket pivot and a bullish engulfing, at least not including the wicks on Friday. Good volume, everything green, great earnings per share, trades at a multiple of 18, does not pay a dividend. I'm not really bullish on banks right now, but here's another bank like TCBI that looks interesting. Lazy Boy is like Ethan Allen, might be a home furnishing that you might buy to build a new house. Had a negative kahuna on Friday, but after a big run up from 15 to 17, it gave back a little bit on Friday, gave back a grand total of 20 cents, but enough that it had a kahuna form. Kodak Oil, about the only energy stock positive, and I didn't like it that much, but it's mostly green, has great earnings per share growth, and I don't see anything there I really like. It looks like it's up against resistance, and we'll have to see where it goes from here. Virgin Media was that satellite provider and content that we talked about. Looks great. One of our favorites over the last couple. Big run up, sort of a pennant here. Had a negative pocket pivot. I'm not making much about this on Friday. Still has good earnings per share growth. I'm looking for a reason to buy it, and therefore, if I'm true to form, I would have called it a pullback, waiting for a signal. Select Comfort would be similar as one that's pulled back to free parking. I'd like to see a pocket pivot. I'd like to see a kahuna before I touch it. I'm bothered by the red here. Sort of intrigued by some forward-looking earnings per share growth. Not one of my better picks. Trex is they support home building, and they've had a very nice run. A little bit of a pullback. Big long leg doji on Friday. Look at this earnings per share growth and a multiple of 43, which is high, but their earnings per share growth is 2.5 times the multiple. So even if they maintain their multiple, if they hit the earnings, the stock is going up. I don't remember this guy, but I can see why I liked it here. Extended, top of the high jump bar, so probably not going to get into it. Another finance stock is an insurance stock. Some of the insurance stocks at HGSI have been doing extremely well. Multiple PE of 12, 2.6% dividend, growing substantially faster than its multiple. I would like to capture this if it pulled back in. Maybe I don't get that chance. Something to look at. Certainly a leader with 5 pocket pivot days in a row. Interestingly, as a driller, this has been a weak market, and maybe Lou, if he sees my video tonight, can comment on why Noble looks different than the others. As you can see, it pulled back to the 200, had a squeeze here, moving up. Lots of kahunas, everything turned green, pocket pivots, has earnings per share growth, modest dividend 1.3, multiple 20, and a stock that's growing 60, 80 times. That's a pretty favorable looking story. Here's the one that I'm very interested in. Very tight pattern on the uptrend, lower left, upper right-hand corner. Just had new approval for a prostate cancer drug. Is liked by everybody, and that might be a reason not to like it. On the other hand, what a great time to buy the stock. Pocket pivot, bullish looking day on Friday in a bad market, at free parking, volume coming into the stock, a little bit bothered by the red on the bongo, so that might be enough to have me slow down, doesn't make any money. I know this company extremely well. I've been buying it and selling it off the 50-day moving average. It's there. Play at your own risk. A. Smith, another construction play. Good earnings per share growth, lower left, upper right. A couple pocket pivots and a kahuna. Voltec, don't know this company from Adam, but I like this pattern. Sort of a J-hook. Stock was in an uptrend. Sort of a step coming down. Pocket pivot, big kahuna, massive volume on Friday. Again, I probably want to know why. So I would go to FinViz and see what it says here. Earnings, that's good. Post reverses loss. So certainly something to look at. Earnings are out. It's pulled back to the 200. Now I might wait to see it get above the 50 because they have a high likelihood of failing at the 50. But the pocket pivot, the kahuna, huge volume, and this earnings momentum, I would be interested in this. I suspect it's got 335,000 shares a day, and market cap. This is a dinky stock, less than 500 million. So Gallardi on a good day can buy the entire float. So I think I probably would be careful of it, but I kind of like the chart. Watch it. Capital One, another bank, despite my negativity on the banks or a credit card player, both ways. Everything turned green, pocket pivot, big kahuna on Friday. Nowhere close to its high jump, breaking through previous recent highs. And again, I need to know what happened on Friday. That's a very bullish looking chart. And if their earnings are out, earnings are out. Earnings were good. Credit quality improves. This might be something to look at. Trades at a multiple 12, essentially no earning, and maybe it's a turnaround play in some people's eyes. Chart looks compelling. Seagate, this is bottom fishing at its finest, or waiting for a stock to give me a signal. So I called it a pullback because it's still in an uptrend, essentially above the 200. Had a doji come in on Friday. If I saw volume, a pocket pivot, a kahuna come into the stock off the 200-day moving average, I get very excited. That's why I kept it on my list, so I can. Let's say similar things about VRX. It had a nice story in IBD on Friday about the growth through acquisition. As you can see, great earnings per share growth, revenue growth as well. Probably has some concern about integration, but give me a little bit of a cup here. Let's see what it does off the 17 or off the 50 this week. Mellanox, I mentioned, wouldn't touch it yet, but I just got a feeling this stock's going to go back to where it came from, but it's going to probably take some time to heal. Riverbed, talking about healing. There's a stock that's been in a prolonged trend for quite some time and snuck above the 50-week or the moving average here on some really stellar earnings, pocket pivot, big kahuna, tons of volume. Not sure I want to be buying tech, but if there's tech, this could be a leader going forward. Celgene goes in the category of not ready yet, but watch it pull down to the 200-day moving or the 50-day moving average. Horrible day for the stock on Friday. I actually had dinner with some of the company on Thursday. I still don't know why it had a bad day on Friday. They just had apologize for barking, my dog wants me to stop. They just had a massive drug approval in lung cancer, great label for Abraxane. Not sure why they had a tough day. It may have been a symptom of the market. Scout, don't know this stock at all. I kind of got intrigued where it had a sort of almost a belt hold day where it opened up much lower and closed higher than in prior close, broke above the 17 to 50 and the 8-day exponential moving average on huge volume and a pocket pivot and a big kahuna. Has earnings per share growth, and again, these are not buy recommendations for you. These are stocks that are making it to my list. They're going to have me scratch my head and figure out what to do, and they had earnings come out. So I like buying stocks whose earnings are out and are surprised. Rustor was a leader. It's just like Seagate getting down to a compelling place, but it's not done falling. I wouldn't know when to buy it. But if it bases, if I get a pocket pivot, if I get a big kahuna, if I get a bullish engulfing, if I get a belt hold, if I get a hammer, I'm in. And that's why it's there, so I can monitor it. Now, a couple things I am likely to buy if there's weakness tomorrow is the ERY, which is the 3X bear contra on the energy. Now, I'd like to take it above the 50 because it's been resistance there before, but I think this is an intriguing place here, especially if Iran is coming to the negotiating table. That'll take some of the fear out and that premium of oil. And despite the fact we had a number of financial stocks that look good, and this has certainly been a long pullback, FAZ, pocket pivot. I've made money off some of these in times when they've been trashed. Not as compelling, perhaps, as the energy, and they're both low on my list in my spreadsheet view because they're not obvious plays and there's no guarantees. But if this market turns over, those are a couple of places that I'm going to go fishing. So, short one tonight. It's 6:51. I hope everybody has a great week in the market, and I appreciate it. No program most likely next week unless I get bored waiting for my red-eye home. And those that are going to be joining us in PB, can't wait to see you. Look forward to seeing Ron and Ian. Everybody have a great night, and thank you.